just in time for Martin Crabb. He's joining us from Shaw and Partners with us here in Barangaroo. Martin, I don't think you heard much of that previous interview, but that gentleman was calling for the first Fed rate hike early 2022. He says that he would not be buying equities with your ears pinned back, particularly from the North American summer onwards.
Yep.
What do you make of that?
He said the North American summer will be the discussion of tapering.
Well, it's a gutsy call because the Fed has said they're not going to move until 2023 or 2024. So he's sort of saying they're all lying. Inflation's much.
I'm right, they're wrong.
Inflation's much stronger than they all think. Headline inflation is clearly going to spike as we roll off the negative oil prices and stuff of March last year. We're going to get 3.5% headline inflation in the States, but everyone's going to look through it, including the Fed. So we really need to have sort of June, September inflation numbers pushing up higher from that for that view to be right, and for the Fed to reverse course. And there's also probably going to need to be about 9 or 10 million jobs created in that period as well to get the unemployment rate down to where it was pre-COVID. So US unemployment was 3.5%. It's currently just gone down to 6%, with some fantastic numbers on Friday, right? Almost 1 million jobs. But we need 1 million a month every month,
that's
right? So
yeah.
the population's still growing despite immigration. No immigration is still growing at about 0.6% per annum. So that economy needs to create a lot of jobs to get that unemployment rate down, even close to where the Fed think is full employment. So for that to be right, I would say corporate earnings are going to be 20 to 25% higher than they are now. So I kind of want to own equities if corporate profits are growing at that level and employment growth is that strong. So there is a point when you say, okay, the growth's now finished, the Fed's now going to start tightening, and that's when you want to start reversing your equity bets, but not before it happens. Yeah. So I think I'm, not as 100% bullish as you can be on equities because of valuations, but all the partial economic data that's coming out, whether it's retail sales, payrolls, ISM manufacturing, it's all fantastic news. We're in a very strong recovery. The vaccine's rolling out. There's revenge shopping, hundreds of billions of dollars of revenge shopping. We can now go to New Zealand for our skiing holidays. I mean, what's not to like, right?
Well, I'm curious, what do you think about that City note that was put out this morning? You mentioned retail. Really looking more favorably at those retailers that are leveraged to the housing recovery story, the housing market in particular.
Yeah.
Does that hold water with you?
Yeah, and there's not really many ways to play that. I mean, there's not really many ways to play house building either. In the States, there's lots of companies that are home builders, but here the ones that are listed are very small. And there's lots and lots and lots of family-owned builders. So there's not really one resi construction stock. So you go to the second derivative, which is people buying furniture and televisions and restorative stuff. So you've got Harvey Norman, JB Hi-Fi. These are some of the
Nick
obvious
Scali,
names. Yeah, Nick Scali's another one. Yeah. So I think that sort of house formation is the second derivative to house building. But I mean, Simmons Homes, which I'm a shareholder in, that's listed, but it's quite small. AV Jennings has been taken private, so there's not that many.
Fletcher Building in New Zealand.
Yeah, that's got some quite significant Aussie building operations as well. So there are a few ways to play it, but a lot of the builders are they're diverse. They're in aggregates, they're in cement, they're in asphalt, they're in all sorts of things. So they're not purely residential
Simmons
construction.
Building, I don't think I've...
Simmons Homes, SIO is the ticker. Yeah, so I do disclose I'm a shareholder in that one. Yeah.
Okay.
Yeah, I think Boral and Fletcher Building are probably the only ones that spring to mind. Then we're outside of that.
Yeah.
Just the other step back from, as we were discussing earlier, that was a terrific payrolls report. But the market gave us the perfect response.
Yeah.
It didn't move.
Yeah.
So we didn't get that spike in bond yields. We didn't get the US dollar moving the wrong way.
Exactly.
So is that a sign of things to come? Do you think that strong US data won't have that violent reaction?
Well, that's the perfect scenario for equities. So you've got the ISM hits the highest level since 1983, so that's manufacturing activity, which is a lead indicator into employment. Employment's obviously ripping faster than people think anyway. Surely you get 1.8, 1.9% bond yields on the back of those two numbers, because they weren't just good, they were well above market expectations. So it's not just growing, it's growing at an accelerating pace. So that's what equities like, because that means earnings upgrades and share price upgrades. But it normally comes with some PE contraction, which is where the bond market says there's too much growth here, we're going to get inflation. But the bond market's been selling off for 6 months. So it's kind of like maybe the bond market's done enough very, very short term, and it's going to allow the economic numbers to still be good without selling off too much. So that is, that does set up a pretty good month for equities if that can sustain itself.
And we have US earnings season around the corner, and
Yeah.
lots of people talking about this being the next potential catalyst for a leg up in equities. JP Morgan, I think, is on the 14th. So
Right.
keenly
Geez,
anticipating
we're back
US
into it
earnings.
already. We just
Yeah.
seems
I know.
like we just came out of it. Yeah. And we're seeing M&A, right? So we're starting to see M&A. Obviously, the capital market side of the business. I mean, our bankers are all flat out. They had a little bit of a break at Easter, and then they're back into it again. But just seeing some of the deals today, like the Cleanaway deal. So and obviously Crown's now in place. So there's just more and more of that M&A, which you tend to get at this stage of the cycle. So it does set up for pretty good equity markets.
And Cleanaway, get your thoughts on that one, because it seems as if that deal still has a
There's
long
a
way
lot of
to
hurdles,
go.
right?
Yeah.
Even beyond that, though, how do you look at these waste management companies in Australia? Because you would think of them as being defensive.
Yeah, pretty
you know,
boring council
but
contracts. Well,
at
the
the
stock's
same
up
time,
15% today. It's
yeah.
a huge mover. So, I mean, I had a quick look at it. It's not one we really follow that closely, but it looks like a heads I win, tails you lose sort of deal that they've done. So, the Suez assets that they want to buy in Australia for $2.5 billion, the parent company is under takeover bid from Veolia, which is another French waste management company. And so what Veolia can do is pull out of this deal, and if they pull out of that deal, then Cleanaway gets the Sydney assets for $500 million. The Sydney assets make about $100 million of EBITDA. The whole thing makes about 200. So they're paying 2.5 for 200, but they can pick up the Sydney assets for almost 5 times EBITDA. There's not as many synergy benefits in the Sydney assets, but it's a great deal. It's a very cheap deal. So the market's kind of going, well, I really don't care if the big deal falls through. You're getting a fantastic deal with the Sydney assets. That's why the stock's marked so high, because it jumped about 6 or 7% on the announcement, which I've been talking about for ages. But then as the day went on, I think people went, yeah, this is a really good deal. Even if they lose, they win. So that's why that stock did very well. But it's not one that we've owned. I've always looked at it and thought, okay, it's well managed and it's growing, et cetera, et cetera. There's a bit of a succession issue with the CEO, but it just looks too expensive for a defensive business. So I've never really gone near it. But obviously today, if you've owned it, you've done very well.
And on the other end, Incitec Pivot has had a shocker. What's going on
So
there?
that's another one where you look at it and went, hang on, this stock has moved $400 or $500 million today on the back of something that's going to cost 80, they think, which is ammonium nitrate plant in Louisiana. Again, it's sort of prima facie, you're looking to go massive overreaction, but I think it was the 15th of February, the company came out and said, we've got problems with this plant, we're going to have them fixed by mid-March, and it's going to cost us $15 million. And the market went, oh, well, okay, you've got a bit of a history with these plants, but that's fine. They came out today, same plant, it's now $80 million. So it's like, hang on, you told us 2 months ago it's 15, it's now going to cost you more money in the second half. So I think the market's basically said, you guys don't know how to run a plant. You've got no idea what you're doing, so we're just going to discount the heck out of you. Now, ammonium prices around the world have been shooting up, so Incitec should be $3.50
This
on the
is
back
their
of these.
time.
This is their time to shine, and they can't get their plants to work. So I think at least some shareholders have gone, I'm over this. They should be killing it, and they're not, and they can't get their operational act together. I just don't want to be there, which I think is a little bit of an overreaction. It's a bit of a dummy spit by some shareholders, but you can kind of understand with that, sort of disappointment. That's why the market responded the way it did today.
So it's poorly managed, is what you're saying.
Well, I think they've had a checkered history with running their plants, and they've obviously positioned themselves to take advantage of this big upswing in ammonia prices around the world, which is not just driven by agriculture, it's driven by mining activity as well. So they should be in the perfect storm. And you want everything running 101% nameplate capacity to take advantage of. It'd be like an iron ore miner going offline right now. It's like it's $160 a tonne. You're digging up 15. Oh, we've got plant problems. You just don't want to hear it, right?
Well, it was pretty quiet today overall. It's a shortened trading week. Do you think it's going to be a bit more of the same this week?
A lot of people are away.
Yeah.
I mean, I just do my walk from Millers Point to Chifley Square gauge every day, and it's probably half the people away. It feels a little bit COVID-y. So I think a lot of people are just taking this time off. It's been a pretty busy year so far. It's school holidays, and I think, we'll probably stay pretty quiet. It's a shortened trading week in a lot of countries as well, though. It's not just here. So I think, today it just opened up on the back of the 2 days of good news that we missed out on and kind of stayed there all day. What we have been seeing when I've been coming on the show, it's opened up strongly and drifted.
Yeah, that's
but it's held its ground
normally
today.
it's a
So that's a good sign, I think.
And we do have some data out in the US tonight. We have the JOLTS job opening, but we've got China data to look forward to this week, and then the RBA's financial stability report that Annette is hanging out for on Friday.
It's just the one for the pointy heads, that's all.
Well, they're going to talk about housing. They'll probably talk about housing in that, right? So we might see an early hint of macroprudential.
I was surprised, just in my previous life when I used to do these things, before the financial stability review, they normally put a paragraph in the statement leading up.
Giving you a hint.
We got nothing today.
today.
They didn't even say lending standards are sound.
Yeah.
So they're really keeping a lid on it this time. So on a quiet week, I think you might find a few more headlines. Yeah. Everyone's desperate for APRA to do something.
Yeah.
And so because APRA they kept pushing back last week. House prices aren't our problem.
Yeah.
So this is the hands-off pointy-head version, but if we start to see, slippage in some of the key metrics, I think we'll get a few headlines.
Well, I mean, they did say that they'll be monitoring trends in housing borrowing carefully, and it's important that lending standards are maintained.
Yeah, but they didn't say they're sound.
Yeah,
That's all. That was. If you really wanted, we were desperate for a change of word today, just to have something to talk about. Let's face it.
We tried to make the best theory possible.
Hang on every word.
It was now nothing's changed. Nothing new. Yeah.
Nothing
new. Listen, so we will be watching that 7,000 level, no doubt, for the XJO to see if we can breach it this week. From there, hopefully further upside. Martin
Onwards
Crabb,
and upwards. Yeah.
Shaw and Partners, always a pleasure. Thank you.
Thank you.